All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. All right, so let's talk about something really quick. We have a little bit of a reversal developing here. I want to point out one of my friends. He was, and this chart is the U.S. dollar CNH. A nice little Gartley pattern developed on it. That's not specifically what he was looking at, but you can see a nice little potential reversal here in the US dollar CNH, which would be a possible signal of a kind of a risk off type of move if we stopped here at these at this support. So I just want you guys to know that. Here, let me remove that. You can see this is the daily chart going back to 2014. The US dollar CNH is at really key support. Okay, so I think it's worth noting, like I said, this is not my idea. This is a friend of mine's was pointing this out. So I think it's worth noting. So anyway, I'll come back to that here. Or actually, I don't think I'm going to come back to it. I think I'll end up tweeting about it a little bit later after we're done here this morning. So I'm a little irritated because I got stopped out of my dollar Mexican peso, and then but I turned around and bought it at the same place I got stopped out at. I was so irritated. I sometimes I think the market actually knows exactly where I'm at and then does it. Same with the US dollar Norwegian krona. Although I didn't buy this one back yet. I got stopped out right here, and then I wouldn't be surprised if we bounce from here, just enough to irritate the hell out of me and anybody else who's long. But we have to see what happens with the rest of the dollar pairs. So the rest of the dollar pairs are going to be important. So let's go over to the euro. Let's start off with that. And I have to tell you guys, it has been extremely choppy. And I was telling the guys and gals in the chat room just a little while ago, I had a great week last week. And then I just, earlier this week here, I am pissing a lot of my gains away from last week. The move lower in the dollar today felt like a stop move, but it felt like it was pretty much I think a move that may have stopped just like myself and a lot of people that were trying to play counter trend. So anyway, hold on really quick. I need to put this up here. Okay, so let's get the bias chart done. Anyway, so the euro dollar, this is going to be really key resistance. I know we're around the 127% extension. I'm actually going to mark up as resistance 122.45. Okay. And I'm going to have to say, while we're above this trend line, let's just keep it on bullish. We get back below this, and then things are going to be a little different. Okay. So right now that comes in, let's just say roughly around 121. So while we're above 121, let's just keep it on bullish. I don't feel as the same way again with other currencies. So let's go over to the cable. The cable pressed right up against the 127% extension. 142.20 is going to be resistance. Now, support intraday will be at 141.60, then back down to 141. So just, in the event that we break back below 141.60, we have 141 to deal with. Okay. I'm gonna keep this on bullish while we're above 140. while we hold this resistance, or excuse me, I'm sorry, support. While we hold that support, you got to keep it on, just kind of bullish. Can we continue to break out? I think that's the risk right now, but I'm going to flip back to neutral if we get back below 140. I think it's just because we held it. You have to. Now, the Aussie, I'm not so convinced about. I think we're struggling. Here, there's a 618 retracement. Let's get rid of this one for now. That's keeping us up. This 78, I'm going to call it 78.20 as resistance right now. And you guys know that 76.90 is support. It's right here. Okay. So we're just testing the upper end of this range. So be respectful of that. Okay. Okay. Let's go over to the Kiwi. So the Kiwi, I believe we are in the midst of building this triangle. Now, speaking of harmonic patterns, (161% extension will put us right about there. Okay. So I actually think that if you want to have New Zealand dollar short exposure, that's the place to do it. Is 78 or 72.80. Sorry. So 72.80 should be a short there. Okay. I'm actually going to do this because I wouldn't mind actually having some short exposure there. I'm going to set an alarm at 75 or 73 in this case, but I'm setting alarm for there just in case we reach for it. Because if we reach for it, I do want to be short some Aussies or some Kiwi up there. Okay. So just let it hit a brand new high and then I might be short. Dollar Canadian. So again, this was leading in I said this in FA.C.E. This was leading an Asian trade. I'm surprised we didn't push lower today. So if you recall, let's go back here to the blog. Okay. May 11th. So this is last Monday. Okay. So I want you to let's just think about this for a second. I think the dollar Canadian, it looks vulnerable, especially for a possible stop loss run below the 120.50 level and maybe even below 120. However, I have my radar on looking for any false breakdown and move back above the 120.60. That would trigger a counter trend long for me in the weeks ahead. Okay. So we came really close to 120 level. I'm going to actually wait till we get back above 120.75, 120.80. Because do you see all the, let me zoom in here. See all this right there? Oh, shoot. I forgot to write that. Hold on. I'm sorry. 120.80. Okay. It's bearish, but I'm watching this. And then 120 is support. It's going to be pretty key. All right. Sorry, guys. I forgot to finish off the Kiwi. Support in the Kiwi is going to be right here at 71.60. This is a rising trend line. So 71.30. 71.60. Okay. So the reason why I wanted to point that out regarding the Canadian, sorry, is that I wouldn't be saying this if we would have slid all night long, but the fact that it moved lower in Asia and then it, rallied back, that's something, right? All right. Dollar Swiss. Dollar Swiss is heavy, and we made a new trend low here. Hold on really quick. Let's do this really fast. That looks significant. So 90, we have to get above 90.40. Oops. To flip this off from bearish. Next support, 89.25. Okay. US dollar, Norwegian krona. This is so irritating to me because I know what happened to me. It just stopped me out, and it's probably going to turn. So this 8.15 is support. That's actually key. We have to keep it on a bearish designation while below, well, definitely below this trend line, which is 8.35. Okay. And dollar mex just below those lows. So of course, just enough to stop out everybody, myself included. 70. So the low is 1971. So I'm going to write down 1971. And I still think we're in a range. 20. Well, for today, I just have to write down 2030. Dollar yen. Trend line support is going to be pretty key, and that comes in at 108 today. Well, I think I wrote it down last night at 108.50, so I'll just keep 108.50. And then resistance is 109.65. Okay. Let's go over to dollar index. So here we come into really key support at 89.65. What's that low there? The low is 89.68. Today's low is 89.69. So I'm going to write down 89.65. That's pretty key because you can see spike low there, but while we're below, the trend line comes in at basically 90.50 now. So while we're below that, we do have to put in a bearish designation while we're below this trend line, which comes in at 90.50. Okay. All right. S&P. Let's talk about that for a second. So the S&P 4,200 is obviously resistance. I know we talked a lot about it yesterday. I think that's the underside of this broken wedge. It's also key resistance. Support is going to be back at this 4110 level, or we can write down 4100. I think it's range bound in the S&P at this moment. I think if we can get back above 4,200, it'll change. But because we came out of a wedge, we have to keep it in range now, okay, because it came out of this ascending wedge. Let's go over to gold and silver and Bitcoin. So if you guys saw, I did put in a short on silver because I wanted Stelios to be really upset with me today. But no, it just no, but it's just really short term. I'm looking for this. I'm looking for.
I think it's possible. Yeah.
Yeah, I mean, just to move back down to 27. It's not a. I mean, if you think about it from a risk reward standpoint, it's you're risking 1 to make 5. So, and it's counter trend, and you don't want to go aggressive, but I mean, this is a confluence of the 78% retracement and the underside of this trend line. So while we're below, let's just call it like 2880. I mean, you got to be a little careful, right? Support will be all the way back down today, back down at 2780, then 27. So now gold looks, and Stelios, I have to say, really good call on this trend line because it seems to be really holding gold. Also, we have some horizontal resistance right here, right? So those are the highs back here in January. So that comes in at 1876. But I think gold, while we're above the 200-day moving average, I think we have to put it on bullish. Now, if we slip back below 18, and you guys might remember my analysis from the Morning Edge, or I'm sorry, from the FACE webinar. If you remember here in gold, I was kind of explaining to you guys like the thought process of anybody that was short last week. I think while we're above here, you got to be bullish. But if we get back below 1845, that's where, anybody who was chasing it higher above the 200-day moving average, this is where they're going to have a little bit of a problem. All right. So I'm going to keep it on bullish for now. Bitcoin, obviously 42,000 is really key support. That is the line in the sand. And I have to go back here. Let me check something. Let's go back to Bitcoin because I want to make sure that this is Bitcoin bull bear line 42,000. That is by far probably the most important number in crypto right now. And you guys know we're range bound, but we break below 42,000. We close below 42,000, and you got to flip bearish. 47 is resistance. Okay. All right. So this is your bias chart, and hopefully Steve is not here. Hopefully.
Good luck with that.
He went back to bed because I don't know what the hell he was thinking. I'm going to drag myself out of bed to talk on the FACE webinar. I don't understand his philosophy there. I know he loves you guys and all, but come on. Hey, Stelios, can you give me about 5 or 8 minutes? I know the market just opened, but Amir just asked for palladium and platinum. I can come back and wrap things up in just a few minutes.
Sure.
Okay, I'll be right back.
No problem. Speaking of, by the way, I posted the bias chart. Speaking about Bitcoin, one thing that we need to be careful of is that so far, before this last big push above 10,000, and the whole of the crypto sphere just took a huge bull run, and valuations are quite a lot bigger than they were last year, let's say. Cryptos used to trade kind of in line with risk. So when we did get a big rally in equities, they would follow, and similarly, if we got a sell-off, they would underperform as well. But now they are big enough to be able to actually lead. They used to just follow, I think now they're big enough to be able to lead. So why am I saying this? Because today, again, we saw Bitcoin and Ethereum trying to rally. Ethereum is still up 4% of the day, but Bitcoin is back to flat. So, if we see these attempts to rally, and if they don't happen, and if we do break below 42,000, I think, in my opinion, this is going to be probably the first time that Bitcoin will be leading indices, and it has the power to now. I don't know what you think, Steve, if you agree or not, but I think it's big enough now to actually make a difference.
Skeptical about that. Yes, it is
in the short
bigger,
term.
Bigger than it was. There is no question about it. But my gut feeling tells me that cryptocurrencies are still following and not leading, because in my opinion, proof of that is the fact that Bitcoin, for example, has been in a correction lower. And I remind you that Bitcoin was like, especially the highs, had by far the biggest market capitalization of all the cryptos, right? So it's been moving lower since, what is it, mid-April? So it's now more than 5 weeks, actually, that we've seen this move unfold. And indices were only down 4 days.
Yeah, I'm just saying that if we do get if we do break down below 42,000, I think that's going to be serious for Bitcoin, and that's why I think we
serious for Bitcoin, no question about it. Yes, it is going to be serious for Bitcoin. Do I think it necessarily will lead indices lower? Not necessarily. I think the opposite, though, applies. I'm meaning Bitcoin seems heavy. It is testing a key support area. If for some reason we get another leg lower in equities, I think this might be the trigger for Bitcoin to break through support and push towards the next downside objective.
Our friend Chad is saying, I'm hearing commentary that decline in Bitcoin is related to rotation to hard assets with the realization of inflation. That's very possible. Yeah.
Listen, it is possible. If that's the case, it is another of these ridiculous myths that get shot down, right? You remember that they tried to. It's the rhetoric always tries to adapt to excuse, to give excuses and to give reasons for the price actions we've been seeing. Initially, they tried to tout Bitcoin as a currency. Then, when they saw that this isn't going to fly because it can't nearly have enough transactions to satisfy the needs of a tiny minor country, nevertheless the planet, then they said it's a commodity, then they said it's store of value, now a hedge, as well as a hedge of inflation. And now we've seen that we've had recently all these prints of higher inflation. Which of the two assets is performing better, gold or Bitcoin, right? So there goes another myth getting busted. That cryptocurrencies are, store of value that protects you from inflation. That's BS. I've said it before. Irrespective of what's going to happen and how they're going to move, they're definitely in a big bull market. There's no question about it. But we don't need to make excuses of why that's happening. Many times, mania is enough of an explanation of a reason to explain it. Is it because of inflation? Absolutely not. If we have high inflation going rampant, do you really see a lot of people buying fiat cryptos? Because all of them are fiat cryptos, with the exception of which is it, Stelio? Tether, that supposedly is backed.
Tether is supposed to be backed by dollars. Yeah.
Supposedly, but we have strong indication that that's not even the case, and that's of course like a scam. But if we assume that it's not a scam, with the exception of Tether, I don't think that any of them claims that it's backed by some kind of a hard asset to assume that due to that, it's of course Tether as well isn't backed by hard assets, right? It's backed by dollars supposedly, which of course is susceptible to inflation. I meant to say that it's the only thing backed by something, in which case is a fiat currency, which doesn't help with inflation, right? Now, if they make at some point a cryptocurrency backed by gold, silver, anything anyhow that has intrinsic value, then yes, that cryptocurrency has absolutely no reason not to act as a very decent hedge to inflation. It's not that I'm against cryptocurrencies as a concept whatsoever. I'm just against buying BS that people are selling just because they want to, create the proper narrative to excuse what we've been seeing on the charts, right? I would be more than willing to buy any crypto that was seriously built and was backed by something that has intrinsic value and of course properly audited, so oppositely from Tether, so we know that whatever they claim backs that cryptocurrency is actually there, right?
Yeah, fair point. Okay,
Oh, Steve, you're here.
Yeah, mate,
yeah,
I
he's
am.
here.
Oh man, you were supposed to really take today off.
Yeah, you see, it would be too much. Bed is annoying. I mean, it's boring.
Bed? Did you say bed is annoying?
Yeah, it's boring. I mean, it's nice when you sleep, but once you wake up, what, you know, yeah, what are you
All
supposed to do
right.
there?
Well, I know everybody appreciates you being here, so I'm gonna tune out, and I'll let you finish up. So you
Okay,
guys,
mate.
all have a great one, Steve.
You
Try
too,
to
mate.
feel better today. All right.
Yeah, it's gonna be fine. Yeah, Bitcoin and Ethereum definitely in some type of corrective moves lower, and as we said, Bitcoin especially testing a key support area. So it's make it or break it here. The buy the dippers. Actually, there's something I forgot to do here. Let's also fib extend this move lower with this leg lower. You see, also equality target. We hit equality target yesterday at the lows, right? So beautiful triple confluence of supports, roughly at 42 and a half. So, key pivot area for Bitcoin. In my opinion, we break through this, and I see absolutely no reason why we won't make it to roughly 30,000. So there is more to go. Definitely more to go if this level breaks to the downside. Now, um, having to do with other hard assets, since we were talking about them and we have questions about them, crude oil made an attempt earlier today to break through this channel. It seems to be getting rejected as we speak, but very early on the day. So I remain bullish crude oil. I just don't think you should be buying it, right here unless it actually breaks out, right? So, we might have more consolidation. Here's natural gas still consolidating within a larger triangle. I think that it's a very good chance that sooner rather than later it's going to break out and keep on moving unabated. Here is platinum, which refuses to choose a direction. And I've said it before. The more we consolidate here, the higher the chances that there is one bearish leg missing. So keep that in mind. Now, of course, can platinum be moving lower while gold and silver are moving lower? No, actually. And that troubles me a little bit because gold seems to have broken out, at least the way I've drawn the charts and I've taken into account both weeks there and there. I think it has broken out. So I don't know. I don't want to fade this. Silver as well. I don't want to be fading silver, although admittedly silver hasn't broken out yet because it's still in a different type of consolidation than gold is. But gold miners were leading. Now gold is following. Perhaps the rest are going to fall in line one by one, right? Now, having to do with palladium, palladium might have broken out or might be attempting to break out, or we might, we need a little bit more price action. We might be forming a little bit of a different channel here. But I do think that this move lower is corrective. So bottom line, as long as we trade above 2,700, I keep respecting the upside. That doesn't mean, of course, that we cannot, do something like this first, right? Something like this. So, I think it should continue higher. but not necessarily immediately from here, right? Same deal with copper. As you see, copper and palladium seem to have very, very similar type of price action recently. So, what applies to one applies to the other, meaning that copper's corrective move might unfold, further to the downside. And that would be the healthy thing, to be honest, right? Uh, but it's not necessarily the case that it's going to do so, because, we've seen copper go through this run with minimum corrections, mostly consolidations, actually, right? So it has given practically zero opportunities to people that wanted to buy pullbacks because there were mostly no pullbacks, just consolidations and then resumptions of the uptrend. Let me see what else we have now. Having to do with the FX world, in my mind, nothing has really changed, right? Euro is pushing higher. I mean, Euro has clearly broken out, right? You can see the formation here. Euro has clearly broken out. I see no real resistance before we hit the previous high at 123.5. So, what can I say? I don't see any reason why you should fade the dollar weakness in any case. And, speaking about the DXY, DXY has also broken down from this expanding triangles formation. 88.25 is the next downside target. Why should you fade it? In my opinion, you shouldn't. I mean, people that have been trying to fade dollar weakness during the past few months, in my opinion, have managed to mostly have losses. I don't see how you would have really made money. Yes, there were a few days that we had rallies, but I mean, in comparison to the moves to the downside, I think you must have been really lucky or really good to pull profits being long. And why should you try to fight the trend? I really don't see any big reason. I'm still short NOK, by the way. NOK seems to want to break another consolidation to the downside. Next downside target is at 8. USD CAD remains extremely weak, so the Canadian dollar remains extremely strong. We've actually been trading during almost the whole day below the multi-year low that we found in September of 2017. That's not the type of events you want to have when you want to look the other way, right? I mean, the fact that it's oversold isn't enough of a reason for you to try to buy it. The fact that it's breaking to multi-year lows should tell you everything you want to know, which is it's very weak, and it clearly has a reason for it to be weak. So, in my opinion, don't try to fade it. At least not yet. I don't see any signal that would tell me to look the other way. I would be a little bit more skeptical with the Aussie and the Kiwi. I mean, look at the big divergence between the USD CAD and the Aussie or the Kiwi. And if you're wondering what divergence I'm talking about, let's overlay CAD USD, right? Let me do it again. CAD USD. Is it on the same scale? Let me see. CAD USD on the same scale. Yeah. So look at the divergence here, right? Let me make it a different color so you can see it. Style. Let's make it what's going to show well. No. Okay, green, let's say. Okay. Let's make it thicker also. There we go. So look at it, right? Here's the Aussie. Here's the USD CAD. We just want recent price action. There it is. New highs in CAD USD, far from having new highs in the Aussie. And the same thing with the Kiwi, right? Look at it. So the Canadian has been overperforming the Aussie and the Kiwi lately. So, why should I try to, guess what kind of corrective formation we have here in the Aussie or the Kiwi, and if it's already found a bottom, or it might have another leg lower or whatever. I mean, clearly the Canadian and the Norwegian currencies seem to be leading the rest of the commodity currencies, right? So case in point, look at the NOK USD as well, right? Here it is, same deal, right? Overperforming. When we had this big leg lower in the Kiwi, the NOK didn't follow. And here's the Aussie, also an overperformance in comparison to that, right? Higher high, that was the high back there. That's the high now, while the Aussie hasn't produced higher highs. So having to do with commodity currencies, I think, you want to be long, you should stick to the Canadian and the Norwegian for the time being. WDC, let's see.
That's
What's
Western
that?
Digital, I think, isn't it?
Oh, Western Digital. Okay,
Yeah.
let's see what Western Digital is doing. I haven't checked Western Digital for a very, very, very long time. Yeah, and it's not doing anything. I mean, talking about the long-term chart, because shorter-term chart, this was a diamond formation. Diamond formations can act both as continuation, right, and reversal formations. So I don't have much to say. It has broken out clearly. Let's Fib retrace the last big move. Okay, there we go. To the lows. Let me zoom in. To the lows, and we're roughly at the 61.8. Actually, interesting resistance area here, right? So we break above this 76.5. I think that's going to be a big development. But be careful, because diamond formations can act like triangles, right? I mean, we might see a last thrust higher here, and then get something like that. Not unlikely. So I would pay close attention to this price action during the next few days. For the time being, we have a legitimate breakout higher. That's still the case. I haven't changed my mind. Just RSI divergence, this horizontal support resistance area, plus the fact that we had a diamond formation here, would make me somewhat more skeptical. I mean, we've seen a rather big move higher, and this recent correction was, in the form of a consolidation. We didn't see like any real price retracement. So that's what I think about Western Digital. Bottom line, in a sentence, if I wanted to load up on something that has to do with equities, I think you'll find better charts out there, right? Better technical opportunities, better technicals to buy something. I mean, I wouldn't force myself to buy Western Digital here. I'm not saying it doesn't look bullish. I'm saying that, during the past several weeks, you've thrown at me several charts right and left. Some of them looked much, much better to buy them than this one. Steve, GDX above 40 is a breakout. Also GDXJ, SEAL and SEALJ. Yeah, let's have a look at them. Listen, the GDX was the first one that broke out. There's no question about it, right? Not only it broke out, back tested, moving higher. I think it has already broken out, right? I think it broke out some time ago. Now the GDXJ,
that broke out yesterday.
That broke out
Or
a few days ago, but later than the GDX itself. Now, having to do with SEAL and SEALJ, SEAL seems to be breaking out today, and SEALJ, which is the junior miners for silver,
on the cusp.
I think today breaking out today as well. Different type of formation here, a triangle, a symmetrical triangle, right? I think it's breaking out today. So bottom line, don't try to fade any of those, if you ask me, Michael. Okay.
I'm still long all four of those.
I can't blame you, Stelio. I can't blame you. I'm also long 2 of them.
And trailing stops now, so it's
yeah,
safe.
why not? USD SEC, by the way, also breaking down. Keep that in mind. Nobody asked, just hadn't had a look at it in some time. My pleasure. Any more questions, guys, girls? Anything else you want us to look at? Ruby. 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 Ruby looks very, very, very bullish. Varum, while this is some kind of a corrective formation, most likely a symmetrical triangle, right? There we go. So would I be buying it here? No. Would I be buying a breakout? Sure thing. Absolutely. Absolutely. Has corrected now for quite some time. So if we do confirm a breakout higher, I think there should be quite nice momentum behind that move. TLRY.
Tilray.
Yeah, if you remember, last time we checked this, I was clear about it. It's a dangerous market. It looks totally like the boom and bust cycle, this last leg higher. Now, somebody that would want to, really force the bullish argument here would say, there you go. We are in the cusp of some kind of a bullish breakout. Technically not invalid as a point of view. I wouldn't be trading it personally. Just, letting you know. Now, as I said, there is a technical argument to be made, but I've seen many formations like this produce very minor rebounds and then sharp reversals and continuations lower, right? So keep that in mind. Now, Triple D, is that a company that makes women bras or something, Stelio? What is it?
Yeah.
I think the same thing can be said about this one. Now, somebody can make the argument that we've had we've had a recent breakout higher, and yes, there is some change in behavior here, right? Now, what worries me about charts like this is that there is no indication that the formation is this one, right? I mean, let me give you an example that I've seen many, many times unfold. You get something like that, and then you're like, oh, the formation was something like this, right? Or, I mean, it's again a type of sentimental event that led to this spike higher. I have no idea what happened, but clearly, something that was created a lot of enthusiasm for this market, and then whatever hopes seem to have gone bust. So yeah, I guess you can be long, right, against these lows. But again, would I be buying this? Only I would be buying this only if I had a good understanding of the fundamentals of this company, right? 3D printers, what do you mean? I use a 3D printer, but what do you mean 3D printers? Is it a specific company that's called 3D printers?
No, this is the one, 3D systems. They make.
No, I'm saying that because I can tell you from experience. Let me show you guys. Let me show you. One of my 2 webcams, I use it for my 3D printer, so I can monitor it even when I'm, remote, so I can monitor it remotely. You can see it there, right? So I have, a webcam dedicated to my 3D printer that you can see right now. So I do use a 3D printer, and I can tell you there are several companies that make 3D printers. I don't think when I was doing my research, I ever saw printers from a company named 3D printer. And if that's the case, I would be very, very skeptical because, I checked a lot of good printers, but none of them was, from a company named 3D printing, 3D printers. Anyhow, bind. Oh my God. This is such a mess of a chart, honestly. The regular boom and bust cycle, just look at this. This thing retraced to 99% the whole move post IPO, right? Imagine how many people lost their money buying here, there. And then we had another enthusiasm, and now we're retracing again. Stay the hell away from this. This is not a proper market, if you ask me, honestly. I mean, what type of thing is happening here? I have no clue whatsoever. It's such a nasty price action. I mean, this was predictable. This move lower was predictable. This was a triangle. And in my opinion, we're building a smaller one here. So if you want my point of view about the short-term next move, I think it's lower again. That's what I think. The next short-term move is lower again. Steve Stelios, what is your opinion on gold royalty companies? Stelio, remind me, what is that?
They are basically companies where you pay and you get a percentage of their production. You have the right to a percentage of their gold production. You pay up front and you get that. It's like you're financing basically their mining. I've never looked at these. And
listen, exactly. I've never looked into that, but I can tell you in advance because I've seen things that work like that in the past. I can tell you one thing as a fact. It is a super leveraged bet on the metal, right? Meaning, if gold is an unleveraged position, if GDX is somewhat of a higher beta play on gold, if GDXJ, which are the junior gold miners, is an even more higher beta, bet on gold, then this is like triple high beta, because you put other factors in. In my opinion, nobody should be involved with things like that unless you have the ability to do very good due diligence in things like that, in betting in very small miners, in getting royalties, in future production. You need to have a very, very good understanding of the specific business. And some inside information that is reliable would also help. By inside information, I'm not talking about the illegal type of inside information. I mean, an inside view of, what kind of royalties they have in specific
basically
ground.
Understand the company and how it operates and everything. Yeah.
Yes, and what are the chances that they're actually going to find, a lot of gold in, whatever they've bought already. What kind of studies they've done and how promising they are, so on and so forth. So if you ask me personally, as a general purpose type of investor that I feel that I am, it's out of my league. I wouldn't go into that. I mean, why not stick to GDX? You know what I mean? Which is a lot more diversified, because the problem with this kind of play is the following: there is a chance, and not a negligible one, that gold is going to explode higher, and you can still lose money just because you bought royalties in a company that ended up having a lot of underwhelming production in whatever kind of land they had bought. Right, so there is still a chance that you're going to be looking towards, being invested in gold, and gold performing well, and you're not doing well with your investments. So unless you have like somebody in the inside, somebody in the company, and you have a reason to believe them that they have very, very good chances of actually producing gold, and the market is not really pricing that in because who knows and who cares about a small company and what they're going to do. Stay away from it. Go in a more generic way into investing in gold or silver or whatever. Okay, let's wrap it up then.
Thank you.
Have a wonderful rest of the day, guys, gals.
Thank you, Steve. Get some rest, man.
Bye-bye.
Thanks, everybody.